What's up, y'all? It's Mike in the building. Let's talk about the markets, the economy, and my net worth update for the month of July. I'm doing a different format this time. I kind of went a little, I did a little too much, maybe. I wrote a 16-page report that I'm going to include somewhere in here about just kind of breaking down all the catalysts that we talk about. Um, that we mentioned in the last video. I kept track of them throughout the month and just kind of did little summaries of them. I made a couple charts comparing different types of indicators and just data from um, different months. I'm gonna go into all that. You'll see some of the report in the video. I'm just gonna skim it and read some of it word for word, and other things I'll just kind of paraphrase. So let's see. So this is what it looks like. Um, so I'll read this for you. Included in this document is a report of the state of markets, the U.S. economy, the global economy, and how my personal finances were, affected by them in the month of July 2022. The purpose of the report is to record important headlines, compare month-over-month financial data, study new resources, and list upcoming catalysts and their corresponding dates. So this breaks down, this is basically our little table of contents. So we have the summary, important headlines. I'll probably just kind of gloss over that, maybe go into like one or two of them. Summaries of the catalysts that we mentioned in the previous video. These are the charts I mentioned, the side-by-side comps of, there's basically one that's like lagging indicators, May to June, and then there's another one, June to July. Just kind of like snapshots of the beginning and end of the month of July. I just did a little quick study on how mortgage rates are determined. I mentioned in the last video that I wasn't really sure exactly how mortgage rates were determined before your personal financial status even is considered. So I might not go over that in this video, but it's in that report if you want to take a look at it. Really brief earnings reports analysis. I have numbers for expectations versus what actually came in, and I have a color coded chart for that to just kind of visually see how we're doing with misses and beats and earnings. Then I'm going to go over my net worth with my handy dandy spreadsheet and graph. And then I'm going to go over what my strategy has been over the course of the month and show you all my buys and sells for most of my investments. I mean, like the Fidelity thing is like I'm not including that in it. This is more like the stuff that I really have more control over, the Robinhood account and basically Coinbase. And then just a back section. If I do reports like this every month, I'm going to try and be better with the sources. I'll be honest, I didn't do a great job with them because I just kind of I just kept forgetting as I was doing things. So some things are sourced, some things are not. But honestly, for the most part, you should be able to find anything. Like if I'm talking about something and you're like, oh, let me take a look at that. It should be pretty easy to find, honestly. But the majority of things are cited. And then I think I have like a little conclusion. So let's see. I'm going to try and do my best to timestamp this. So if there's things that if you're only interested in earnings or you're only interested in the net worth graph to see how I'm faring, you can just skip around. I won't be offended if you don't want to watch the whole thing. It might be kind of long, so strap in and maybe get a cup of coffee or something. What was I going to say? There's one other thing. Oh, yeah. And if you like financial videos, like and subscribe to the channel. I'm going to try and do one of these monthly. And I'm not sure what I'm going to do with the reports. I don't know if I'm feeling doing an August one. I mean, if people really appreciate it and find it helpful or even want to help me put it together, I would definitely do it more. But if nobody really cares about it, it's just it is a lot of work and it is time consuming. So I'm going to see how I feel about that. The other thing is maybe I'll do like a report like this quarterly or something instead of every month. So yeah, I mean, feedback would be appreciated. If you just think this is way overkill, dude, just stop. Just tell me that. If you find it helpful and you think that you might check out an August report if I did one, then let me know. All right, so let's see. Yeah, so in July, in the beginning, we saw oil fall, Federal Reserve raising interest rates by a historic 75 basis points for the second month in a row. GDP shrunk for the second quarter in a row. Some people call that a recession. Some people do not. There was a bunch of issues in the cryptocurrency space with liquidity. I think at least one or two exchanges went bankrupt, I think. Unemployment remained flat, but we want to keep an eye on the labor market because that's apparently what's really keeping everything kind of stable, it seems like. I mean, whenever you're talking about all the negatives, I feel like it comes up and people are just like, well, the labor market is really strong. I mean, it's allowing the Federal Reserve to make these big moves and justify, which maybe it is justified. I mean, we have to get the inflation thing under control, but that's a whole rabbit hole. So let's see, important headlines. I think this might be like the biggest takeaway from July. Maybe. It's the gas being so expensive ends up bleeding into so many other things. So it might just seem like one metric, but I mean that coming down, even though it's still outrageously expensive for gas right now, it definitely eases things a little bit. So I'm really curious to see how that bleeds into other metrics in the CPI data, or just for energy itself in the August CPI report, which is actually looking back at July. So that's going to be really interesting. We really want to keep an eye on the labor market. We really want to keep an eye on that CPI data coming out. I'm going to mention those dates later, but it's the 10th, August 10th. So we've got the yield curve inverting, which I think it's still inverted currently. It's been negative for a while, I think, at least a few weeks. That's in the comps chart that we're going to go over later. Let's see. Bunch of weird leadership things. Boris Johnson stepped down. The former PM for Japan was shot. There's something in Italy too. I don't know where that is. Mario Draghi quits as prime minister. Really weird. And let's see, what else? Par repos are surging. That I feel like I've been hearing a lot about, but it's not like I'm not hearing about it in mainstream media. But I mean, I guess this is CBS News, so. Founders of bankrupt crypto hedge fund 3 Arrows Capital goes missing. Euro falls to equal the dollar. Netflix is a disaster. Home builder sentiment takes historic plunge in July as buyers pull back. That could be a leading indicator of issues in real estate. Some labor market things here. Goldman warns it may slow hiring. Google pausing hiring for 2 weeks. So there was a lot of that talk kind of in the middle of July there. We still have the Ukraine and Russia conflict not helping things. Biden tries to persuade Americans that the U.S. is not in a recession. I just think that's funny. Excuse me. I think this helped put a little bit of downward pressure on gas prices. We've got a bunch of bills. I don't know. I've meant to look into that, kind of where they're all standing. I think Congress is in recession for August. Not sure. Mortgage rates fall sharply after negative. I don't know if I'd say sharply. Maybe after negative GDP report and Fed's latest hike. That was on the 29th. So let's see. We've got a bunch of catalysts that we said we wanted to look out for in the July video. So let's go over the catalysts. Some of them I might just gloss over. Some of them I might go in depth. Honestly, I didn't really plan it. I just figured we'd just kind of go through this report together. So prior to the CPI. Okay, yeah. So we're seeing hikes all over the world, not just the U.S. A lot of people in similar boats. Japan remains accommodative. Lockdowns in China are definitely affecting growth and distribution. That bled into Tesla's earnings. Reduction of the balance sheet to begin in June. Yeah, I think they're going to be ramping things up in September. Okay. Okay. Yeah, this is a good section to linger on. Participants. So this is, I didn't even say what this was. So July 6th, this was the FOMC minutes release, which was for the meeting of June 14th to 15th. So this is when they did their first 75 basis point hike. Yes. So during that meeting, participants noted job gains have been robust, unemployment had remained low, invasion of Ukraine by Russia created additional upward pressure. Recent indicators suggest real GDP growth was expanding. Let's see. Growth in business fixed investment appeared to be slowing. Household credit quality remains strong. Little evidence to date of a substantial improvement in supply constraints. That's what's making everything just terrible. Expect unemployment to increase, reaching 4.1% in 2024. I don't know. All right, let's see. July 8th, we got the jobs report, non-farm payroll, blah, blah, blah. Basically, the gist of this is we've got non-farm hourly earnings rising by 0.3%, and unemployment stayed flat at 3.6. Job gains in business services, leisure, hospitality, and healthcare. Yep. June 13th, we had the CPI data. I'm sorry, July 13th for the CPI data for June. So that came in higher than expected. That was the highest I think we've seen since we've been in this inflation mess. It's the highest since 1981 at 9.1% year over year. We're going to break these numbers down a little bit more in the comp charts. The hopes for the June 2022 CPI were to see a plateauing or indication of inflation peaking. Although this wasn't the case, since CPI data is a lagging indicator, we may see some reprieve in the July data. That's what I was talking about when oil fell below 100 per barrel. So right after this, the market was pricing in a 78% chance of a 100 basis point hike, but that chilled out soon after, and then the expectations were back to 75, and that's what we ended up getting. July 26th to 27th, the FOMC meeting. This is when we got the 75 basis point hike. So during the question and answer portion, Powell mentioned, Jerome Powell, the Federal Reserve chairperson, a 2% target inflation rate, which he's been talking about since the beginning of this, plans to significantly reduce the balance sheet in September. That's what I mentioned earlier. The Fed looking for inflation to trend down the next two reports. Yeah, that's what we all want. There's no August meeting. The next one's in September, so we're not going to see a rate hike in August. May slow hikes if appropriate. It depends on what the data shows them. Some softening in the labor market is expected, as well as slowing GDP growth. We're seeing the slowing GDP growth. We haven't seen the softening in the labor market reflected in the data yet, but there has been slowing in hiring, and I think there's even been some layoffs. The federal fund rate, they have a target of 3 to 3.5% end of year. So we are currently looking at 2.25 to 2.5. So let's see. So that means if that's their target range, we're only looking at 75 basis points to go. for the remainder of the year. So they might really, I mean, if we have a much better CPI reading in the August report for July, we might have them slowing hikes to maybe 50 basis points, maybe even 25, depending. I mean, they probably wouldn't slow that quickly to 25, but yeah, it's interesting. No judgment on technical definition of a recession. Somebody was trying to get Jerome Powell with that question because of the White House statement. I don't know if you heard about that, but the White House came out with a statement, kind of like sort of trying to redefine the definition of a recession. And Jerome Powell was asked about that during this conference, and he just kind of dodged it, which I thought was funny. He doesn't think we're in a recession due to the labor market performing well, and he also said the June summary of economic projections is still a pretty accurate guide as to what steps they're taking. And then during this conference, this kind of began a decent little rally. During the conference, the S&P moved 1.5%, Bitcoin moved 3.9%, and the 10-year Treasury fell to 2.7%. So in that section that I probably won't go over, that regards what makes up mortgage rates, the 10-year Treasury is that impacts that. So that falling was good. All right, so here are the data comps that I was talking about. I might change how I do this in the future. I'm wondering if comparing percents and then making a percent change, the numbers just look weird to me. I don't know if that's the best way to show it. I mean, even if you're just looking at the two columns, it's helpful. You don't necessarily need the percent change thing to see, but let's see. So what did I say here? Yeah, because this is an important point, and I mean, this kind of even explains the report. I mean, the report is a lagging indicator in itself. This report that I'm showing you that I made. So this section is section 4, June versus July data comparison with percentage change. There's also some that are May to June, just because of how reports, release the data, like what data they're looking at. So I think this kind of explains what I'm trying to say. So I might read some of this. Every month, a lot of data pertaining to the economy is released. A lot of them are what is referred to as lagging indicators. I have included 2 tables with varying degrees of lag. I felt that it was necessary to separate these data because they are comparing different sets of months. The first chart illustrates numbers that are fairly old, but the reports come out a lot later than the metrics that are taken into account. The second chart are mostly numbers I pulled from June 30th to July 31st, which was yesterday, in order to see what kind of influence July's events and trends had on the economy. So like these are the kind of like snapshots that I was telling you about. These should give us a more up-to-date view on what occurred this month, because we're not waiting for somebody to put all this together and release it in a report, which is kind of funny because that's basically what I'm doing. Although the lagging indicators feel like old data, it still helps us determine what kind of trend we are in for any of the fields we're looking at. And then I also included GDP growth and changes in the federal fund rate as smaller charts in this section. So we've got, let's see, consumer inflation expectations. This is what people think inflation is going to do. So this is increased from May to June. Consumer sentiment fell, I think, to, it might be the lowest since they started keeping track of this metric. Very, very low consumer sentiment. CPI, all items. This is what I mentioned in the CPI section. We're going to kind of break this down a little bit. So CPI, all items. The May rate was, I believe this is the month over month. 1%. June was 1.3. So we increased there. CPI food fell May to June. CPI less food and energy, which I think this is what they're referring to when they say core CPI. That rose, and that's kind of the broad-based issue that we're having, where it's not even just food and energy that's skyrocketing. I mean, they obviously went up substantially more than everything else. I mean, look at this. Gasoline, all types. The May rate was 4.1. The June rate was 11.2. It's just insane. And then the year over year unadjusted in May was 8.6. The June rate was 9.1. That was what we saw in the CPI data that was released in July. Non-farm employment change. So employment did shrink there between May and June. PPI increased. This is the producer price index. Let's see. Real hourly wages went up, and unemployment stayed flat. We've talked about that a few times. So these are the ones that I kind of came up with myself. They're just little snapshots. So June 30th. Is that June 30th? Yeah, June 30th. 10 2-year Treasury yield spread. This is what they're talking about when they say, when this inverts, it usually indicates a recession. We've been talking about that for maybe a year, like at least 6 months, probably longer, maybe 9 months. And it kind of came true, depending on what your definition of a recession is. So yeah, in June it was not inverted. July it was, and it's been pretty steady there, which is not good. That's, like I said, that's the indicator of a recession, basically. Federal funds rate changed by 75 basis points. 30-year mortgage, fixed rate mortgage, fell June to July. June 30th, it was, so this is from FannieMae.com. I think they update it weekly. Let me know if there's a better, more up-to-date, more accurate place to find data on fixed rate mortgages in the U.S. But if I stay consistent, it should be fine. So June 30th, we saw rates 5.7. In the end of July, we saw 5.3. So it's good that that's come down a little bit. The VIX is the volatility index. That fell, which is good. Less volatile stock market. Crude oil fell. We talked about that. And then the 10-year Treasury also fell kind of substantially. GDP. So we shrunk in Q2 according to the advance estimate. That's the first of 3. They update them as they get more data. We shrunk, but we didn't shrink as much as we did in Q1. So do what you want with that information. But it's still 2 consecutive quarters of shrinking GDP. Federal funds rate changes. These are the hikes we've had so far, and this is where we're at currently, 2.25 to 2.5. Check this out if you're interested. It's going to be in a link somewhere in the description. I'm not going to go over this right now. Earnings reports. So we've got the Tesla Shanghai factory closed. They sold Bitcoin to prop up cash on hand. American Express showed 30-day past due. I think I want to try and keep an eye on this. 30-day past due payments increasing to 0.8% from 0.6% in Q1 of 2022. Snap had, I don't think their numbers were that bad, but in the report, what's the word? It showed them having little to no growth in Q3, and they fell substantially. I think a lot of issues here have to do with ads, and that bled into the market and affected other things because, if you see something like that with Snap, you might wonder if companies like Meta, Google, and Amazon may have the same issues with ad revenue. So these are the earnings that I kept track of. I didn't do every single company that reported, but I have the release date, their ticker symbol, earnings per share expectations from Google, and they're reported, and then what the beat miss was. And then these are a couple that I really just wanted to look at. Snapple. Yeah, so Snap. It was, basically just even. I think I had something in here twice by accident. Ignore that second UPS. Yeah, kind of just like bleh earnings. I don't know. All right, so then we've got let's go to the sheet because I'm zoomed in here, so it's it's kind of It doesn't look too bad on that screen actually, but for me it looks kind of blurry. So I'm going to do this. Okay. So let's see. All right. So don't have any cash. Checking savings, just under 40,000. Real estate, all that stuff is staying the same. I considered updating the value of my car, but I didn't feel like going through the Kelly Blue Book thing. I don't think it's going to make much of a difference either way. Stocks went up a decent amount I think I'm up like 13% on the month. Crypto, I talk about this in the report. I think last month I may have accidentally recorded the number that was in my 2022 spreadsheet instead of my all-time crypto buys, so it didn't have the full value of what I have. So this jumped up like 2K, and that's why. Even though crypto did, I think, fairly well over the month. My Fidelity account broke 90 again. That's been fluctuating a lot. And then I've got my mortgage here. So net worth for the month of July, 208,739.60. It's an increase of almost 4%, which is probably the best one I've looked at so far, honestly. Let's take a peek at the this is a good view. Yeah. So my cousin had the idea of adding the S&P 500. I did the best I could. I feel like it's not overlaying perfectly with it, but you can see that they're pretty correlated. And one thing I mentioned in the report, the write-up for this section is I had you can see the trend lines, just trending down. You see a low here, then you see a lower low, and then you see a lower low. You have a high, a lower high, a lower high, but then look at what happens here. This breaks that trend. So I had a higher high for the first time since I started recording this, and I'm wondering if that is a bullish sign. We'll have to see what the next I mean, I guess if I'm above this here, that's a pretty good sign. So what else we've got here? Okay, I've got my chart there. I talk about that a little bit. I talk about all the things I just mentioned. Okay, my current strategy. In July, I made no change in my financial strategy. Out of the 2 pay periods, I invested and saved 35 to 40%, respectively, as a percentage of my gross pay. So that's how much I try to pay myself first before anything else. And then I dollar cost averaged my stocks that I've been picking. Stocks I bought included Google, Vanguard's S&P 500 index, Tesla, and Matterport, and the high yield dividend index from Vanguard. I sold 8 shares of a firm. I kind of goofed there. I was just trying to time things a little bit, and I might miss the opportunity. I was hoping that maybe it would fall substantially where I could buy back in from, below where I sold these and just try and like fix my cost basis. It was kind of dumb. It was just stupid. I just got really burned on a firm. I lost like 80% of the value on that. But it is what it is. I still have I forget how many shares I have, but I will probably just hold my remaining shares and neither buy nor sell a firm. Put a in there. Okay. Cryptos doing the same thing I've been doing. Purchased $35 worth of 3 to 4 cryptos, including Bitcoin, Ethereum, Cardano, and Dogecoin. So I do that 35 of each coin twice a month. Or no, it's once a week. So it's like a little over $100, I think, a week in crypto. Let's see. Yeah, so let's see. Through the dollar cost average. Through the dollar cost average strategy, you'll notice I am buying in very small amounts, but doing it every market day brought me to a sum of over $1,000 invested in these accounts for the month. But 192.76 of my buying power was from proceeds I received when selling a firm. I feel that implementing this strategy over the long term will perform well. So these are all my buys and sells for the month. I'm not going to linger on this, but it's in the report if you want to take a look at it. It's actually just kind of boring. Google did split. They did a 20-to-1 stock split in the middle of this month somewhere around there, July 18th. So that's kind of cool. Okay. So basically, in the conclusion, I'm talking about how it's hard for me to formulate a conclusion because this is the first report of its kind. I can't look back at a June report like this and say whether things have, how things have changed because I haven't had this kind of comparison yet. So if I do an August one, this will probably be a little more concise and have a little more to it. My gut is telling me that if we see a CPI report in August for the month of July that is flat or trending downward, we may finally start seeing the bottom of the stock market. The Federal Reserve can ease their heights and markets can hopefully start to stabilize. The fact that the markets rallied after a 75 basis point hike and negative GDP numbers tells me that things are a little backwards, but people are no longer surprised by these things. So I'm just saying that it's basically priced into the market already. All these things are not really surprises. The market doesn't like uncertainty, and these aren't necessarily, they're not great things, but we knew that they were happening. Real estate is a market I feel mixed about. Supply is bottlenecked, which is keeping prices elevated, but competition and over-ask purchases are softening. Mortgage rates have plateaued, so I'm wondering if real estate may just stagnate for 6 months to a year. I don't know. I mean, that's just totally guessing. It's anybody's guess. I hope to have a better conclusion in the following report where I'll be able to compare two similar sources. Generally, I feel bullish after the events of July, but take that with a grain of salt since I'm a long-term investor who really isn't affected either way by what the markets do. So I have a bunch of sources here, and then I might be including this in every report just kind of as I'm doing this research and compiling things. I've been adding to the financial resource guide I have. That'll be linked in the description too. And it just kind of tells you what I've added to that. So I think that's actually pretty much it. I think I covered everything. This is the financial resource guide I'm talking about. If you haven't seen that, it's just like kind of like a one-stop shop. I'm constantly adding to it where you can kind of look at all the things that I use to compile a report like this yourself. Like if you want to look at the producer price index, there's the link for that. And it's got all this stuff. And then, there's a bunch of terms maybe you're not familiar with, like JOLTS or ARMS or SOMA. Like it's all just laid out there for you. And yeah, some things are empty. Like I just had ideas and just haven't gone in and filled them in yet. But yeah, if there's something you feel belongs on here, let me know. I'm trying to think if I covered everything. We do have to quickly go over catalysts to look for in August. So August 2nd, I don't know if you want to write these down or put them in a calendar or something. August 2nd, we've got JOLTS, job openings, and labor market turnover. That's released at 10 a.m. on August 2nd. August 5th, jobs report, the employment situation. Like we said, we really want to pay attention to the labor market, so those two things are important. CPI data is super important. August 10th, that's going to be a really big one. That kind of just dictates everything at the moment. PPI, also kind of important. FOMC minutes of July, that's August 17th. The PPI data, I don't know if I mentioned, that's August 11th. And then August 25th is the second estimate for the second quarter GDP number. That's not as important either. The stuff in the very beginning of the month is crucial, especially the August 10th CPI report. I think that's it. Yeah, please give me feedback and let me know if this was helpful in any way. If I should continue to do it, if I should continue to do it, if there's anything I should add or remove. But yeah, I'm liking seeing this. So let me know how you guys are doing, and let me know what you think of this. Like and subscribe if you can. That really helps me out. And until next time.